Let me welcome on board Himanshu Mody, the CFO at the Suzlon Group, joining in on the show right now. Himanshu, hi, morning. Welcome to ET Now. Thanks for taking the time out and joining in today.
Morning. Thank you for having me.
Right. Himanshu, let's start off firstly with the slew of orders that you've been bagging. What's the total order book like and the book to bill standing at?
So currently we are at about 2 gigawatts, close to 2 gigawatts in our order book, and these orders have to be executed over the next few quarters. So yeah, I mean we've been of course taking advantage of good tailwinds that we've seen in the industry, both in the IPP segment, CNI segment. So we are as Suzlon well placed to capitalize on the market opportunity.
Tell me, what's the order inflow pipeline like, and what more orders do you think you're going to bag, say, in the next 6 to 12 months? Anywhere where you're actively bidding?
So, of course, several discussions that we're actively having. Again, very difficult for me to give you a number as to where we land up at in the next 6 to 8 months. But from a capacity perspective, of course, at Suzlon, we can do anywhere between 3 to 4 gigawatts of turbine manufacturing in a year. So, with a lot of active orders in under negotiation and discussion, we'll of course come reports the same to the public once we've signed definitive agreements on the same.
Sure. Are more orders now coming in from corporates for captive use, etc., or government orders continue to contribute more?
So it's a fair mix. I mean, some of the recent ones we've seen is largely the CNI or the captive segment, but also there has been bidding activity at the government level. So it's a fair mix of both, I would say.
Also, Himanshu, tell me, what's the average timeline of completion of the projects that you've bagged, and what kind of revenue growth do you envisage for, say, FY25 to 26?
So timeline, of course, depends on the size of the order. I mean, we have very small retail orders as well, and we have big ticket orders as well, which go into multiple hundred megawatts. But safe to say that, a mid to large scale size project would be anywhere between around, I would say, 18 to 24 months, from definitive contract to final execution of the last turbine. That's a fair estimation. On your question about FY25 and FY26, as I said, I mean our existing order book is close to about 2 gigawatts. A fair bit of that is for FY25, and some of it will spill over into FY26. So again, difficult for me to give a firm number for both the financial years, but certainly it's a good mix of both financial years in the current order book.
Himanshu, morning. Now, there seems to be a worry of lack of EPC players to erect the towers that you make. A few years ago as well, that we had seen that the orders were ready, but the customers had stopped taking delivery. Do you think this cycle is likely to repeat?
So, certainly, I mean, there are challenges for execution on ground, whether it is land availability, power evacuation, crane availability. But having said that, I think, the entire industry as a whole, the entire ecosystem is sort of ramping up to meet the ambitious targets that are set by the government of India. And I think whilst there are on-ground challenges, but there are several EPC companies coming up. We do project execution ourselves, and whilst there would be challenges, but I think we are ironing out over a period of time.
Right. I have to ask you this, Himanshu. We typically don't ask this to managements, but I'm just curious to hear it from you. In the last 1 year, your stock has doubled, or rather has become 4x from 10 rupees to now 40 rupees. Do you think the growth prospects are fairly valued in the stock price, or do you think there's still some gap there?
So it's a very, very subjective question. I mean, again, it's something that as management we don't have any control over. It is the market forces clearly that determine this. From our perspective, I think over the last few quarters, we've done all the right things. Our primary objective was to, straighten up the balance sheet and make that debt free. So I think, with the QIP successfully getting concluded in August of last year, we were able to achieve that. Our working capital tie-ups need to be sorted, the LC and bank guarantee limit, so that we have the ability to execute these orders. That is now behind us. So from a management perspective, I think we've done made all the right moves and in a timely manner that we could, which probably is getting reflected in the stock price. So far as valuations are concerned, market dynamics, I mean, those are completely external factors beyond our control that determine the same.
Okay, just wanted to understand from you as well what the working capital days are currently, and depending on the order, what's the overall balance sheet situation?
So working capital days is a mixed bag between our manufacturing and the services business. Having said that, there is clearly room for efficiency on our balance sheet to improve the working capital days. I think once we reach a level of maturity over the next few quarters, we are actually very actively focused on optimizing our working capital cycle. And I think the street would see a difference on the working capital numbers over the next 2 to 3 quarters.
All right, and what's the outlook in terms of the budget this time around? Is the sector expected to see any big bang announcements, or is there any major wish list from the budget?
So again, I mean, there have been a slew of policy initiatives that the government of India has announced to promote the renewable energy sector over the last year or so. And we just hope whatever budgetary announcements we are actually confident will be in line with supporting the growth of this industry. I mean, there is an ambitious target of close to 500 gigawatts coming from renewable energy set by 2030, and about 100 gigawatts of that has to be from wind. So I'm sure the policymakers and the powers to be will make all the right moves towards ensuring that we meet those targets.
All right, good to have you on board. Thank you for giving us a little bit more clarity in terms of how the business is shaping up. So that's the word coming in from the Suzlon Group. CFO saying that execution has been strong for orders. They are looking at a 3 to 4 gigawatt turbine manufacturing a year and are well placed to capitalize on the market opportunities.